Day trading, the thing that so many people want to do to achieve a life of financial freedom. If there were or are ads on this video, then you'd probably see an ad from Raging Bull or Tim Sykes, not sure if he runs ads still, but people just want to achieve that $1 million portfolio through just a few trades. Oh, I turned $12,000 into $1 million in just a year by following this one strategy. Welcome back to the channel. I'm Jacob Fisher, and today we're talking about day trading and the things that you should do before trying to attempt it or maybe succeed in it for yourself. I know there's a statistic out there that's like 90% of day traders fail or 10% make all the money in the day trading world. And while that might be true, we don't have a great list of people who have tried it and failed or tried it and succeeded. It's not super accurate, that number. Let's just tap the like button and get into it. First, you should know that you will lose money day trading. I don't care who you are, even top tier professionals pulling in $10,000 a day still have losing days. That's just the way it is. It's not ideal, but the sooner you come to terms with the fact that you will have red days, the sooner you will be okay with your aspirations of day trading for your profession. Along those lines, your winners should be much larger than your losers. Let's say you have a 50% win rate. That's not terrible, but if your winners are $100 and your losers are $200, then there's no way your strategy can become profitable. You should have clear strategies that provide you with a higher win to loss ratio. Maybe like a 2-to-1 or even a 5-to-1 would be amazing. That means you would need a losing trade 5 times in a row to wipe out the gains from the winners that you make, hopefully more than 50% of the time. Even if you only won 50% of the trades, that 5-to-1 ratio would keep you well above the water with all your losers. I just mentioned strategies a bit, so let's get into that. You should have a clear and defined strategy for every single trade you make. Getting in a random is not a good idea, nor is getting in because the stock is up 20% on the day. You will probably lose money on most of your trades, and not to mention, if you happen to buy at the top, you're probably going to be down more just hoping that that stock goes back up, and hope, is not a strategy. I'm sure you've heard that from people. Most strategies don't involve being down 50% unless you're going from multiple 100% winners, we're talking 200 to 300% with options. That's definitely very possible to do with options. Sometimes it can just happen. But if you're down 50% on your trade and sell for 20% gains, then that's not a profitable strategy. You're almost just hoping for the stock to come back up even though you're down 50%. Not only that, it's putting so much stress on you, you will probably end up with gray hairs much quicker than you thought. And that's why you got to make sure you back test your strategy, which gets into the next tip. You should be paper trading and back testing your strategy for months before you get in there with real money. Not only will this show you your win-loss ratio, percent wins, you'll get a good feeling of what it's like to enter a trade and exit a trade using your strategy. You don't want to be caught holding the bag, so paper trading will allow you to develop that exit and not allow you with the actual real money to hold on because you've now broken your strategy and you've broken your exit plan. That's not to say when you first start off trading with real money, you're going to stay in because you want to be green on the day. You probably will do that a couple times before you take kind of big losses and realize you shouldn't do that anymore. That's also something you just need to encounter, the ability to sell for a loss and move on to the next trade, because every trader will take losses in their lifetime, so you just have to come to terms with that quickly. It would be hard to not have emotions when you're first starting out. I mean, you're day trading, you're trying to make money. It's something that you want to do. You want to be green on the day and not red. Once you've built up your account and then back tested your strategy, then it's time to move on and use your real money. That's after you've been paper trading for a couple months. I would say a safe portfolio value to get started with would be around $10,000. But you should have $10,000, that money, that you are willing to just throw out the window, and it shouldn't be your savings that you need to depend on in case you lose your job. You should only fill up your account that you're going to be day trading with about $2,000 of that $10,000. So when you wipe out your account, you don't immediately lose that $10,000. You can kind of replenish it a few more times because you'll probably wipe out your account a few times. It took me a few tries to actually get profitable with day trading. Of course, it's never always sunshine and rainbows or whatever they call it, but I'm to the point where $50 to $100 days are pretty consistent as long as I'm following my strategy. If I ever deviate from it, I lose money, which of course happens, but sometimes emotions kick in. You don't want to be flying into trades with $10,000 buying power and just hoping it goes up 20% or something so you can make 2K on the day. And on another note, you should probably have a cash account rather than a margin account. A margin account is restricted to the PDT rule, pattern day trader rule, where you can only make 3 round-trip days in a rolling 5-day period. A cash account allows you to get around that rule. Though the thing with a cash account is that stocks take T plus 2 days, or 2 days to settle, and options take T plus 1 or settle the next day. With a cash account, you could make 4 $500 option trades in one day and then do it again the next day. Or you could make 2 $500 stock trades one day, 2 the next day, and then your funds will be settled, that T plus 2, make another 2 $500 trades and keep going around that route so you could trade every day. Once you blow a few accounts and then start making money, feel free to increase your account size with the cash value that you hopefully still have left at the end of it. But make sure not to oversize too quickly. The US has the PDT rule, which I did just mention, but that also means you shouldn't try to circumvent that rule and go for an offshore broker. I know maybe some of you have heard of Short Trader, and they were an offshore brokerage that a lot of people used, but they recently closed their doors, and you guys can look up this story for that, for Short Trader that is. But just stick to US brokers if you are in the US, and if you're not, then consider an international broker like Interactive Brokers, which I almost said international there, but Interactive Brokers for international residents. A lot of US brokers also have an international option. You just have to look around for the best one out there. Finally, make sure to watch a ton of videos on day trading strategies, or even sign up for a good person's course. There's people out there that review courses that are offered in this realm, so you can definitely watch those videos before you decide on a course. Should you develop your own strategy? I mean, it's not a bad idea to do that. At some point you probably should, because you're probably good enough and you can get a feel for what's happening in the markets, and then you can make up your own strategy that might work better than the one you've been using. I know a ton of people who like swing trading, and personally I don't, because I don't like to be holding positions overnight, though maybe that's okay with you and you're okay with holding things overnight, but I personally stick to intraday trading. And a final word of good advice: if you want to start day trading and you want to do it for a living, then you absolutely can do it. With enough perseverance, practice, and screen time, then you can absolutely become a professional day trader, unless you get too emotional in a trade and just being a bag holder on the stock. If you can't get around that little emotional roadblock, then maybe you aren't set out to be a day trader. That's just kind of the way it is, and maybe you were just supposed to be a long-term investor, which is perfectly fine. If you're a bit of a robot, then you can probably do it. I mean, the market's traded by algorithms anyway, so why not become one? Let me know down in the comments what you think of day trading, and if you tried it out, have tried it out, or actively do it. I'm just kind of curious. I upload videos on Monday, Wednesday, and Friday on travel and finance. If that sounds something interesting to you, make sure you subscribe down below. Thank you so much for watching, and until next time.